Hello, welcome everyone, one and all, to the Committee for Better Banks webinar on why Wells Fargo workers, like myself and my co-panelists, support shareholder proposal number 11, which requests that the bank's board of directors adopt and publicly disclose a policy detailing its commitment to respect the international human right of freedom of association and collective bargaining. Hi, my name is Jessie McCool, and I'm a compliance senior associate for Wells Fargo's Wealth and Investment Management division, and I support both the bank and brokerage lines of business. I'm based out of St. Louis, Missouri, and I've been at Wells Fargo and Company for about 10 years. We are hosting today's webinar because we want to provide Wells Fargo investors and other stakeholders with our perspectives, the employees at Wells Fargo, on this very important proposal. I am also a member of the CBB's Wells Fargo Workers United organizing committee because I want to make this bank a better place to work for all of its employees. And we will believe that this will also benefit our customers. Regardless of what department or division we work in, Wells Fargo workers are stressed out over unfair pay, inadequate training, job insecurity, all kinds of the various isms and workloads that don't make any sense. I especially hear this from colleagues who work in our branches. There's a long history of Wells Fargo firing workers going back more than a decade before the fake account scandal broke into the public's view in 2016. We now know all too well that from about 2002 through 2016, workers were routinely fired for not meeting impossible sales goals. For a while, we had hoped that Wells Fargo would embrace reforms that would ensure abusive conditions like this would never reoccur. We repeatedly attempted to engage in constructive dialogue with our senior management. Some of us even got to meet with our current CEO, Charlie Scharf, to share our concerns, as Juan will mention. But having had 4 CEOs in 5 years has made this exceedingly difficult. Finally, we as workers decided enough is enough. We needed to exercise our right to form a union. And our numbers are growing every day. Hundreds of our co-workers are taking action, joining our cause, from California to North Carolina, from Texas to Minnesota, and even as far south as Florida, the whole way up north to Alaska. But what has been truly striking has been managers reaching out to us, asking us how they can support our efforts to form a union, and letting us know that they have received mandatory training about how to handle our union organizing efforts. This is striking because as managers, they know they are not protected by federal labor law. And yet they reached out to us anyways, because they feel that the bank is going in the wrong direction. You got to know that working conditions are pretty terrible when managers are discreetly reaching out to the union and offering their assistance. If you have a question that you would like to ask any of our panelists, there will be plenty of time for Q&A after all of our panelists have presented. And please feel free to submit those questions in the Q&A tab at the bottom of your Zoom screen. And for those watching live on Facebook, we will also monitor questions in the comments section and do our best to respond to all of your questions. Now that we have a little bit of backstory, I'd like to turn this over to our special guest speaker, Brandon Reese at the AFL-CIO, to explain this shareholder proposal and its potential implications. Brandon?
Thank you, Jesse. And thanks you to the Committee for Better Banks for inviting me to speak today. I really want to commend you and your coworkers for your bravery in speaking out to help improve working conditions at Wells Fargo. We strongly believe that companies that are good places to work are best able to meet the needs of their customers. And in contrast, poor working conditions can lead to higher employee turnover and a loss of experienced workers. This is costly for both the company and its shareholders. You are helping to make Wells Fargo be a better employer by exercising your freedom to come together into a union and seeking to negotiate for improved working conditions. Now, the AFL-CIO has submitted a shareholder proposal that will go to a vote at Wells Fargo's annual shareholder meeting on April 25th. This proposal urges the board of directors to adopt and publicly disclose a policy on its commitment to respect the international human rights of freedom of association and collective bargaining. Specifically, the proposal requests that the policy be applicable to Wells Fargo's direct operations and its subsidiaries globally, include a commitment to non-interference when employees exercise their right to form or join trade unions, prohibit any member of management or agent of Wells Fargo from undermining the right to form or join trade unions or pressuring any employee from exercising this right, and finally, describe the ongoing due diligence process that Wells Fargo will use to identify, prevent, mitigate, and account for any violations of those rights, including how it will remedy any misaligned practices. Now, this proposal is important because labor rights are human rights. The United Nations and the International Labor Organization have both recognized freedom of association and the right to collectively bargain as universal human rights. However, Wells Fargo's own statements on human rights are silent on these labor rights. And now, in addition to the United States, Wells Fargo has operations in India and the Philippines. And in our view, the laws of these countries are not strong enough to guarantee that workers can exercise their labor rights. We believe that this proposal will help protect Wells Fargo's employees in both the United States and these other countries as well. We believe that many shareholders share our concerns about the need for companies to respect their employees' rights of freedom of association and collective bargaining. Earlier this year, a similar shareholder proposal at Starbucks received a majority vote by shareholders, and proposals are pending at many other notable companies, such as Amazon. Now, we're pleased that the two largest proxy voting advisors in the United States, Institutional Shareholder Services and Glass Lewis, have recommended a vote in favor of our proposal. And we urge all shareholders of Wells Fargo to support our proposal by voting for item 11 on management's proxy card for the April 25th shareholder meeting. Thank you.
Thank you, Brandon. That was really a great explanation on proposal number 11 and why we should all vote yes on the 25th. Next, I would like to turn it over to Megan Merez, one of my coworkers out of Oregon. Megan?
Hi, thank you. Hi, everyone. My name is Megan Merez. I currently work out of Wells Fargo's call center in Hillsboro, Oregon, which houses multiple lines of business and staffs approximately 1,000 employees. And after working at Wells Fargo for 7 years, it's clear to me that a union would be beneficial for the overall success of the employees, the customers, their shareholders, and the company. I say this to you as someone who has, from the beginning of my career, witnessed and received the blunt end of mismanagement and high levels of incompetence by management in Wells Fargo. From experiencing firsthand the gross mistreatment of myself and my coworkers by Wells Fargo management, to the pains of pulling more work due to high turnover rates, to raising legitimate concerns regarding business practices for it to be dismissed by management, to the constant reorganization of our jobs to the point where I don't even know my own job title half of the time. I say this to you out of frustration for a lack of positive change, out of anger for the treatment of my fellow coworkers, and out of a necessity to change for the future of this company. This needs to be a sprint, not a marathon. Ever since I started as a collector in 2015, I only dreamt of forming a union. I truly believe if we were unionized, things such as the 2016 fake account scandal never would have happened. Shortly after the news broke out about the global pandemic in March of 2020, I was accepted into the executive office, where I worked as a caseworker, resolving high-risk consumer deposit account complaints for nearly 3 years. We were sent home in April of 2020 and forced to return in April of 2022 when gas prices were at an all-time high. Then in August of 2022, our office was pulled into a last-minute emergency phone meeting where we were informed by our leadership that we would be moving to the mediation department. We discovered this department was still telecommuting, so we asked if we too could work from home until the department returned. We were told no, and we were told that we would need to continue business as usual. Less than 2 weeks later, my team had a training for our new role, claims representative, where we would deal with customers' claims of unauthorized or unwanted accounts and services opened by Wells Fargo employees by either means of sales tactics or unauthorized account opening. Which to resolve these matters, Wells Fargo may provide monetary compensation should the claim fall within scope of the mediation program. Then in September, we were notified that there were job postings for the new claims representative positions, which the job description matched the job we were currently doing, but the pay range for the new hires was about $5 more per hour than what we made. We did feel discouraged to apply for this position because our location was not listed as one of the sites, despite everyone else working from home. My team and I were obviously upset and decided to ask our managers in HR if we could get a raise so that we would be compensated fairly, given that we were making significantly less than new hires doing the same work in other locations. We were also initially denied our annual bonus because despite being moved over in August, our official titles didn't change until after the September 30th cutoff time. Eventually, we did receive it, but it didn't come without a fight. I had to escalate this to HR and fight for my bonus and my team's bonuses as well. On top of that, we were told our burn-in period or our grace period would end 2 months early. A lack of burn-in time means that we would be required to meet their department standard of 98% accuracy on all our calls much sooner. Accuracy is a key metric, and not meeting the standard can cause us to lose our incentive pay, as well as result in disciplinary action. We were then told that we would receive no additional compensation, with HR telling us that it was Wells Fargo's philosophy to not pay people moved to a new role as the same as new hires. My team was then told in October we would be moving to a new job within the department. Then without warning, our training for this new role got pushed back, eventually telling us that we would start the new role in March of 2023. Then to our confusion, our team was abruptly moved to this other role within the mediation department, citing a business need in January 2023. This caused our schedules to change to 6:30 a.m. with no flexibility like we previously had. We felt that all these actions were a retaliation for us having raised a basic concern of fair pay. Why shouldn't we, a team with years of experience at the bank, get paid at least the same as new hires assigned to do the same exact work? This experience led me to file an unfair labor practice charge with the National Labor Relations Board last November and is currently pending investigation by the NLRB. However, my experience has only motivated me to work harder to fight for this union at Wells Fargo, because I know if this is happening to me, it's happening to other workers as well. In fact, I know coworkers organizing in other locations have experienced threats of retaliation for handing out flyers that inform workers of our rights to unionize to other coworkers in our break rooms, cafeterias, and other non-working areas during our break times. I too have been passing out flyers in my call center along with other coworkers, and we've noticed that building managers have been taking down our flyers even though my actions are protected under the National Labor Relations Act. I know a lot of my coworkers are terrified of losing their jobs, their livelihood, and are afraid to speak out. This is why it's so important that shareholders vote for Proposal 11. It would help reduce the fear employees experience about exercising our rights and the stress that management's anti-union actions can cause. We as employees, as shareholders, want Wells Fargo to keep us employees at top of mind so we can keep the customers at top of ours. I want my fellow employees to know that together we are stronger. With all this happening, I understand, of course, that employees are fearful to get involved because they expect managers will retaliate against them. But despite management's best attempts, I will continue fighting for what is right, and I hope you do too. This is the first step in us taking back our power. Please help us to do better. We deserve better and we expect better. And Wells Fargo can do better. Thank you.
Thank you, Megan, for sharing your story and your experiences, how it is to be a Wells Fargo worker, whether you're me in St. Louis or you in Hillsborough, Oregon. Now, our next speaker, to add a little bit more to the picture, is my coworker, Juan Sanchez, out of Lubbock, Texas. Juan?
Thank you, Jesse. Hi, everyone. My name is Juan Sanchez. I worked at Wells Fargo for over 10 years at a call center in Lubbock, Texas. I work in the global remittance team where I help customers transfer funds from their bank accounts in the U.S. to their friends and family in other countries, mainly Latin America. I first got involved because I lived through the high pressure sales culture when I was a customer service representative. We still feel that we are undervalued, unfairly compensated, and overworked. In addition to fair compensation that recognizes our value to Wells Fargo, flexible work schedules that continue to allow us to work from home are two of our top concerns. We believe that this proposal is important because there are so many Wells Fargo employees who do not even know that they have the right to form a union. There's a lot of misinformation out there, and a lot of employees are fearful they may lose their jobs if they try to organize a union. To combat this, we conduct regular training sessions with our coworkers to educate them about their labor rights. As Jesse mentioned, we've tried to get management to listen to our concerns, but after repeated attempts, we know that we must organize a union to truly achieve having our voices heard. After first arriving as CEO, Charlie Scharf did agree to meet with several of us Committee for Better Banks members so we could share our concerns. In December of 2020, we finally had a Zoom call where he and other senior executives did listen to our concerns, but nothing changed and there was no follow-up. Then in September of 2021, I was one of many workers interviewed by the law firm Foley Hoag that Wells Fargo hired to conduct a human rights impact assessment. After shareholders demanded accountability and reconciliation, but that report was never released and no reforms were made to protect our rights to raise concerns about our working conditions. A year later, in September of 2022, I, along with Jesse, were honored to have the opportunity to attend the House Financial Services Committee hearing in Washington, D.C. as a guest of Chairwoman Maxine Waters, where Mr. Scharf testified along with the CEOs of 8 largest financial institutions in the country. Prior to the hearing, Jesse and I had the opportunity to try and deliver a letter signed by hundreds of employees directly to Mr. Scharf that urged him to respect our rights to form a union. Instead of taking a petition, he walked away from us and tried to have us expelled from attending the hearing in person. Instead, Chairwoman Waters sat us directly behind Mr. Scharf. During the hearing, Representative Ayanna Presley asked Mr. Scharf if management would remain neutral if workers exercise their freedom to join a union. He responded that we believe that we're best having a direct relationship with them. To his credit, during the break, Mr. Scharf did come over and politely speak with me and Jesse. I joined the Committee for Better Banks because I wanted to improve the working conditions of our fellow employees at Wells Fargo. The number of employees joining our cause to exercise our freedom to come together into a union and negotiate for improved working conditions has been growing in recent months because bank jobs are stressful. We feel that we're undervalued, unfairly compensated, and overworked. Like many of my coworkers, I am also a shareholder. Therefore, as a fellow shareholder, I also believe that respecting our national human rights as working people to join and form unions is in the best interest of Wells Fargo and its shareholders. First of all, it is the law in the United States. Wells Fargo currently is facing unfair labor practice charges that have been filed at the National Labor Relations Board alleging labor law violations. Secondly, respecting our rights to form labor unions can help improve productivity and reduce employee turnover. With the voice on the job through a union, we are better able to raise problems with management without fear of retaliation. This experience just reinforced for us why it is important to there be a policy that recognizes our right to freedom of association and collective bargaining, because otherwise it is clear that the reflexive action by management is to squash any questioning of bank policies that impact our working conditions. Thank you.
Well, thank you, Juan. And it was great to finally meet you in person when we were in Washington, D.C. together. And of course, to get the chance to educate members of the Congressional Financial Services Committee about our working conditions, our issues, and the potential implications that these have for the bank. Now, before opening it up for questions, I would like to take a moment to emphasize a couple of the points that both Megan and Juan made. First, many of Wells Fargo workers, myself included, are also shareholders. And so collectively, we have a long-term and vested interest in the success of the bank. This is not about chopping up the pie into a million little pieces. It's about growing the pie for all of us and ensuring that the proper ingredients are used as well. Second, we just want to be able to exercise our right to freedom of association and our basic right to form a union without fear of retaliation. Because if we're able to advocate for ourselves, we can also advocate for our consumer as well. And finally, the average Wells Fargo employee who helped the bank surpass analyst expectations for the first quarter of 2023 reporting recently is falling further behind. The CEO pay ratio to the median employee rose in 2022, by 11%. In 2021, the ratio of CEO pay to the median employee was 290 to 1. 2022, last year, it was 324 to 1. This clearly shows that pay inequity is getting worse. And it's even worse for the thousands of employees who make the minimum wage of $18 to $20 an hour. So for a teller or a customer service representative making $20 an hour, it would take them 592 years, not months, not days, to make what the CEO made last year. This just is not fair, and it's just not okay. Meanwhile, in context of all of that, Wells Fargo just reported a profit of nearly $5 billion in the first quarter, a 32% increase from a year ago. So just a few things for you all to think about while you're formulating your questions in your minds. And now, if you do have any questions, please submit them in the question and answer tab at the bottom of your screen. I'm going to go on mute for a brief second and take a look and see what questions we have. Okay, so our first question comes from Ashley Van Dyke. Where can one acquire those flyers mentioned? Ashley, I'm assuming that you are a Wells Fargo employee, and if you'd like to send your contact information to us, staff at betterbanks.org, we can get you flyers sent to your location if need be. Sorry, I'm having a little lag here. Okay, the second question comes from Theodora Laurel, and it says, what percentage of votes do we need to get proposal 11 approved? And Brandon, did you want to answer this one?
Sure. Thanks, Jesse. It's an excellent question. So in order for the shareholder proposal to be approved, it simply needs a majority vote of shareholders, which is, I believe, very achievable given the high level support, a majority level of support that a similar resolution received at Starbucks just earlier this year. Moreover, Wells Fargo doesn't have to wait to get a majority vote for it to respond to address the concerns raised by our shareholder resolution. Another company, Apple Computer, earlier this year agreed to implement such a proposal, and the proposal was withdrawn by the proponent. So it's our hope that Wells Fargo management will respond to this proposal by issuing the requested report and performing the due diligence to ensure that it is respecting the international human rights of its workers to come together and form a union to negotiate for improved benefits and working conditions.
Thank you, Brandon. We got one more question. Okay. Hi, thanks for this. Wells Fargo management states that it has a, quote, zero tolerance policy for retaliation. What is your experience with using the bank's existing mechanisms to raise your concerns? And why do you feel that they're inefficient? Well, I can start off and then I'll pass it to the other panelists as well. Wells Fargo trains us constantly about if you see something, say something, raise your hand. It's all over our internal marketing. It's all over our training. It's everywhere. In my personal experience, I was identified at a certain point by somebody, of course, anonymously, and I received a call from HR that I had to immediately remove my tagline from my Skype header. And all it stated was that I was part of the Wells Fargo Workers United Organizing Committee, AFL-CIO, Committee for Better Banks. And that's all it said. As that is a clear violation of the Wagner Act, which is the National Labor Relations Act of 1935. I did what I was supposed to do. I raised my hand and I contacted the octopus, that's what I'll use. That is our ethics line, our HR line at Wells Fargo. After about 8 months of back and forth with HR consultants, legal departments, as well as consulting with the Committee for Better Banks legal team, because I was about to file a ULP as well, I finally got a response that whoever in HR had contacted me was incorrect, and I was allowed to reinstate my tagline as it was acceptable. While I work in compliance and have legal background, I know and understand how to work these systems. I know and understand what you're supposed to say with a legal department. I know and understand how you have to be tenacious in fighting for your rights. However, if I didn't know these things, and if I didn't have the luxury of having the job that I had and was able to devote 9 months to this, it makes it really, really easy to see how, I think it was 5,800 calls to the same ethics line during the sales practice scandal, where people were asking for HR to intervene with the sales practices, before regulators did. It's really easy to see how those all got ignored and how people just weren't tenacious or able to keep up the fight. And one of the things that I personally believe a union could help is to help us have even application and adherence to policy and procedure, as well as better methods for ourselves to advocate for us and the customer. Megan, Juan, anybody want to add to that? You can share your experiences.
Yeah, could you repeat the question again?
Yes. Okay. The question is Wells Fargo management states that it has a zero tolerance policy for retaliation. What is your experience with using the bank's existing mechanisms to raise your concerns? And why do you feel that they are inefficient?
Yeah, that's a great question. So I think with the zero tolerance policy, even if we do raise concerns, nothing is done. Nothing gets done. On rare occasions, we might have a victory, like when I raised concerns regarding our bonuses, but that took them over 2 months to complete, and it's just an ineffective way to pacify us, essentially. And we get told, yeah, we hear your concerns, but what gets done? What do they do to actually show us that they're hearing our concerns other than just talk? So that's my experience with it. HR is not our friend, it's for the company. So
Thank you. Juan, did you have anything to add?
Just that I was around with the sales tactics where, I raised my hands on several occasions, and was written up and for not meeting numbers. Basically, what I was told by management is 3 little words: just do it, or else. And basically, the or else was you would lose your job. So it's one of those things that it was stressful to come to work knowing that you were doing things that weren't in the best interest of your customers, to appease the slogan "8 is great," that was so famously passed around. 8 is great. 8 is great. The zero tolerance. I've reported anonymous to concerns, and surprisingly, they reached out to me. They knew who it was that anonymously brought up other concerns. So it makes me think that I can't trust HR. If when I do raise my concerns vocally, they didn't respond. But then when I anonymously filled out the survey and raised my concerns, I was reached out. And so that just gives me no trust in them.
Thank you for sharing. Let me go look and see what other questions we have in here. Okay, let's see. I just want to commend you for using your voice to build worker powers in your workplace. I very much appreciate your bravery and leadership. Keep up the good work. Si se puede. Thank you. Okay, let's see. Does the human rights impact assessment address employees only? Or does it also, or did it also address the Wells Fargo loan and investment portfolios? Anyone want to add any color on that?
Jesse, I can jump in. Our proposal specifically focuses on the international human rights of Wells Fargo's employees, both their direct operations and subsidiaries, both in the United States and globally. There have been previous shareholder resolutions that Juan referred to that resulted in a human rights impact assessment that was part of a shareholder resolution that the AFL-CIO co-sponsored several years ago with various faith-based investors. And we were pleased that the company decided to implement that proposal and conduct a human rights impact assessment covering all of Wells Fargo's stakeholders. However, the company never disclosed the results. They disclosed a summary of the report that the outside law firm prepared, but they did not actually disclose the actual human rights impact assessment. And one of the recommendations that Wells Fargo did disclose as part of its summary of that report was that all managers should be trained on respecting its employees' human rights. And that, of course, includes the freedom of association and collective bargaining. And so we felt that this proposal was particularly warranted at Wells Fargo because of the allegations of unfair labor practices that are pending at the National Labor Relations Board. And of course, because you all, the employees of Wells Fargo who help make this company be the best company it can be to serve its customers, were so vocal in seeking to exercise your freedom to join together in a union to negotiate for improved working conditions.
Thank you. Okay, let's see what other questions that we have here. Okay. In regards to the recent employees that have been displaced, do they have any additional rights or anything that they can do to support the creation of a union? Well, I mean, I guess off the bat, you know, workers always will have certain rights, such as the ability to discuss wages. You have the, you know, if we had a union formed, you would have the Weingarten rights, you know, to have representation during an investigatory interview. And you still retain your rights to use sources like social media to help discuss your terms and conditions of your employment, and that extends with or without a union. And of course, you retaliation is always prohibited if you were at the time attempting to organize within your workplace. I mean, but these are very high level rights that people just have under Section 7, Section 8 of the National Labor Relations Act. And Megan, Juan, Brandon, anybody want to add to those types of rights that people have?
I would just add, if you're a employee who's been separated from employment in Wells Fargo and you want to share your story, to contact the Committee for Better Banks. Visit their website, betterbanks.org, or email staff@betterbanks.org to help tell your story and speak out for yourself and your fellow coworkers, because that's how we improve companies' performance and turn bad jobs into good jobs.
And of course, if there's, you know, another thing that you could do that just kind of made me think about it. Of course, if there are any current employees that are still in the job role, because I know how you can be displaced and then replaced somewhere else. Happened to me the first 6 weeks I was at Wells Fargo, so I get this, that you can come back. So if there's any current employees that you would want us to discuss forming a union with or provide information to, like Brandon said, reach out to us at staff@betterbanks.org, and we'll get in touch with you and discuss the scenario with you, of course. So thank you for that question. Great question. Let's see what other questions we have. You mentioned a growing number of managers have reached out to CBB showing support for the organizing effort. How would a union improve conditions for higher ups and not just those available to join the union? Juan, Megan, one of you guys want to take that one?
I can take it. So essentially, if your workers love where they work, and if your workers are happy where they work, it's just, it's pipeline. It goes up to management. Management's happy with production. Management's, happy with, their workers being happy. It's just an overall happier place to work. And I say this as someone who, when I was working in collections, they did give us a pay increase, a really large pay increase at the time. And we went from like $11 to almost $20 in like 3 years. And we saw such an increase in productivity. People wanted to come into work. People were, more willing to come into work. People weren't burnt out as quickly as they used to be. And that alone should, help management see that, if workers are able to bargain for better pay, wages, and working conditions, managers will also benefit, because, you can't give the managers, less or give them less benefits than the employees themselves. So I think management would 100% benefit from their employees unionizing.
Yeah, you bring up some great points. And as we've all been talking about, you and Juan and myself have experienced that whole operational heck that is the Wells Fargo HR department. And we all know that Wells Fargo, and Megan, you talk about it when you work in the executive office, is obsessed with process and operations and administrations and making all the, redoing everything that we've undone, shall we say. And I kind of think about it like, from the manager's perspective as well, if we had a collective bargaining agreement, it means that some of those operational things like negotiating with each individual employee about wages and raises and some of the fights that you've had to go through, everybody gets outlined what's in the contract and things like that. It guarantees things that not just the worker cares about, but also the manager. Decent raises, affordable healthcare, job security, stable schedule. It could also produce some administrative and operational efficiencies as well, because at the end of the day, the facts show that unions improve the pay for all workers, and managers are a part of that all workers Venn diagram, right? So it would be beneficial for them as well. And like I said earlier, it's not like we're trying to slice and dice some finite pie apart where we're taking the biggest part of it. Just trying to make sure that we all grow it together and advocate for ourselves as well as our clients. So thank you for sharing that. Let's see, what other questions do we have? Oh, this thing keeps moving as I see. Okay. Are there any Wells Fargo locations that have a union recognized yet? And if so, what was the largest factor in that success? Juan, Megan, either of you guys want to go ahead? Okay, well,
I could, sorry, I was going to jump
okay.
in that there's not a single Wells Fargo location where its employees are currently part of a union. So let that sink in for a minute. about and reflect on the company's international human rights obligations to respect the freedom of its workers to join unions, and yet there's not a single location. I think that speaks for itself, and is why it's so important that you and the Committee for Better Banks are coming together to exercise your freedom, to have a voice in the workplace through a union, to improve Wells Fargo and make it a better company for its employees, for its customers, and for its shareholders.
I'd also like to add that some people might not even know that we exist yet. So I think a lot of the main hurdle is really getting the word out, letting people know that we're here, we're gonna stay and fight, and you know, just let them know that, you know, we all have their backs and we're here for the workers.
Agreed. That's a really important nuance. Both Brandon and Megan bring up the tangible and intangible struggles that we face in a way. What Megan says is correct. We have 265,000 employees. It's one of the biggest banks in the world. I mean, the area I deal with has like aircraft financing, where another area like may have something, you know, else going on. So it's a broad and diverse group, and getting the word out really, you know, can sometimes be a struggle. But also, you know that like some of what Brandon says, like it speaks for itself. Sometimes our word is pressed. It's hard for us to get it out. So it's a struggle, but every day we're growing, and that's positive. See if we have any other questions out here. Try not to accidentally leave while I'm looking. Okay.
Jesse, I didn't want to.
Further questions? Yes, go ahead, Juan.
Yeah, I just wanted to kind of follow up on the previous question about, you know, the benefits, you know, for management higher ups. You know, like Megan mentioned, you know, you know, unfair paid, you know, yeah, the pay jumped up dramatically in some areas. You know, and it just leads me to remember when Sharf mentioned, and I won't say exact words, but basically saying that the lack of talent in the African American was the reason for, you know, not able to diverse and you know, promotions and but I remember for years, you know, my department, my co-workers were exceeding expectations, and then at the end, when it's time to get our annual compensations, we're rewarded with the 1%, 1.5%. Those were 27, 28-cent raises. That just, so a lot of that talent is leaving Wells Fargo when it's, you know, they're not doing anything to keep them here. I mean, it's in any other profession, you know, you get talent, you know, you pay to keep them. You know, sports, education, professors, anything, you know, you get a management CEO, you pay them to keep them. But for the frontline workers, it was, oh, thank you for the great work. We're going to compensate ourselves, but here's the pennies that you will get. And then with a lot of places where cost of living increases 4 or 5% every year, and you're getting a 1% raise, we actually were losing money by staying with this company. And a lot of us that are still here, we stayed for a reason. We see the potential that this company can be, you know, and so there's a bigger cause to it, you know, where so many of us could have just packed up and, hey, let's go find somewhere else and not have to deal with the stress. So this union will definitely benefit those teams, the managers that would benefit from having talent in their groups, and so on and so on.
Yeah, and I think for a bank, you know, where we're not, it's not like we're in Jesse McCool's widget factory, and there's an assembly line, and there's something produced. The capital really is that human capital. The valuable part is us and what we're producing, and it's important for us as well as managers to have that quote unquote codified and some sort of agreement that like a collective bargaining agreement or a union contract, where we can guarantee those things like the fair and equitable pay and decent raises, bonuses, affordable health care, job security, stable schedule, all of those types of things.
And I'd like to add to that too. I've noticed that one of the slogans that we used to hear all the time, people as a competitive advantage, went away. We no longer hear that. We no longer hear a lot of the slogans that they used to say that kind of made us feel like we belonged, such as like team members being changed to employees, just inclusive words that did have some kind of connection between everyone at Wells Fargo. And the current CEO has done away with that, much like they've done away with a lot of benefits that actually help the bottom line workers, right? So you have things such as our benefits, like occurrences, have been reduced to 3 days from 5 days, and that sort of thing helps people who have kids who might have chronic illnesses, people who take care of their parents. So that sort of thing would have a huge impact on the real like working class of this company. So I think to exclude your workers from a seat at the table, it shows how little you want to succeed as a company.
Indeed. We have a few minutes left. Are there any other questions out there? Okay, well, just know that, on behalf of Wells Fargo Workers United, what we are trying to do here is centered on protecting and empowering Wells Fargo workers, Wells Fargo customers, and the communities that we serve. Our collective power will be used to advocate for the worker so that we may advocate for the customer. And our common vision and distinct values, some words that have also gone away in the nomenclature of things at Wells Fargo, provides a framework for accountability to ourselves, our customers, and our world. And what guides our work is our desire to reestablish the face of banking, equitable and ethical treatment of all employees and customers, advocating for the worker, advocating for the consumer, compensation that is reflective of experience and current standards of living, and transparency in all policies, procedures, and processes. Now, if you're following along, you know that says that's the first letters spell out react. So we're asking all Wells Fargo workers to react now and join us. And with that, I'm just excited that everyone joined us today, heard our side and our perspectives on shareholder proposal number 11. And we ask once again that you vote in our favor on shareholder proposal number 11 on April 25th, 2023. Thank you for joining us, and thank you for listening and asking great questions.